Sam Bankman-Fried, the multi-billionaire boy genius who lost 94% of his wealth overnight. This is his story explained in one of the biggest wealth management disasters in history. First off, who is Sam Bankman-Fried, or SBF? SBF is an American entrepreneur, investor, and founder. He's the former CEO of the cryptocurrency exchange FTX US, and the quantitative cryptocurrency trading firm Alameda Research. As I said before, he peaked at $26 billion, and he would soon lose 94% of that overnight, leaving him with a $991 million bankroll. By November 11, 2022, SBF was regarded to have no material wealth after this big financial disaster. A couple other things to note: SBF was a major donor to the Democratic Party candidates. He's known as being the second largest donor to President Biden during his 2020 campaign. He has also donated around $40 million total to mostly Democratic candidates during the 2022 U.S. midterm elections. He is a figurehead for effective altruism. And an example of this effective altruism would be finding charities that are the best in the world at helping others and then donating to that. He had this philosophy to make as much money as he could just so he can donate all of it to what the world needs most. It's also important to note that not only is he the founder of FTX and Alameda Research, but also his crypto token FTT, which I will cover here shortly. First off, what is FTX exactly? FTX is a Bahamas-based cryptocurrency exchange. This exchange was founded in 2019, and at its peak in July of 2021, it had over 1 million users and was the third largest cryptocurrency exchange by volume. While noting that, let's look at Alameda Research and what exactly that was. Alameda Research is a quantitative cryptocurrency trading firm founded by SBF. Now, knowing the structure of Alameda Research and FTX, we can look at FTT and what exactly that is. The FTX token, or FTT as it's more widely known, it debuted in 2019. And a couple of years later, the digital currency was valued at a high of almost $80. Today, there's almost 250 million FTX tokens in circulation. After an article in CoinDesk earlier this month raised questions about FTX's financials, Zhao, who's the CEO of Binance, decided to offload his company's sizable FTT holdings. Now, this is key. The whole rift between Zhao and SBF, Binance, and FTX was a very key component to this whole thing. Essentially, when Zhao decided to offload his company's sizable FTT holdings, this spooked all the other investors, because as that word spread, the token's value cratered. It just plummeted. The FTX token was part of an elaborate rewards-based marketing scheme to attract buyers. The thing about the FTT token, it was more of a utility token. It wasn't expressing or recognizing you as owning a share of stock in the company FTX itself. It was used as an incentive to trade that coin specifically for FTX, the FTT token, by granting different incentives. Essentially, the customers who bought the FTT, they were able to execute trades on the company's exchange at a discount, as opposed to if they were to do it anywhere else. They could also use these tokens as collateral. The company regarded token holders as VIPs. Many of these tokens belong to Alameda Research, though. FTX fell apart quickly, and there's still a lot to learn about its stunning collapse, but it's clear that Alameda Research used that FTT to make speculative bets on other cryptocurrencies and complex financial products. It's a lot of information to digest, but just to explain it a bit further, when looking at the FTT token in regards to FTX and Alameda Research, these VIPs handed over real money to buy a purely digital token from FTX, FTT, and all that was the basis for making risky and speculative investments was the fact that they traded this. The token acted as the conduit through which money was being funneled from the FTX cryptocurrency exchange to Alameda Research. And all of this is as stated by Eswar Prasad, the author of The Future of Money. Now that we know a little bit about SBF, FTX, FTT, and Alameda Research, it's important to go into a brief timeline of events. First, September 2021, FTX moved their headquarters from Hong Kong to the Bahamas. Next, we're going to go to January 2022, where FTX announced FTX Ventures Fund. This would later collapse November 2022. And then in July 2022, FTX finalized a deal, giving it the option to buy BlockFi for about $240 million. Go a little bit more into BlockFi later on. Next, in August 2022, the Federal Deposit Insurance Corporation, FDIC, they issued a cease and desist order to FTX for making false and misleading representations. And this was about deposits being covered by FDIC insurance following FTX president Brett Harrison's tweet implying otherwise, something that SBF would later rectify. Now, in October 2022, it was reported that FTX was under investigation in Texas for allegedly selling unregistered securities. Bloomberg reported in September 2022 on the close relationship between Alameda Research and FTX. This is another key component here to this whole story. I'll say it again, Bloomberg reported in September 2022 on the close relationship between Alameda Research and FTX. This should have been a big red flag. Bloomberg noted that Alameda had functioned as a market maker for FTX early in the exchange's history, and that the trading firm remained. In June and July 2022, the biggest known depositor of stablecoins on FTX. I say all this to tell you that FTX then took $10 billion of the customers' funds and used that to fund Alameda Research. These funds were used in part to pay back loans Alameda already had taken out to make investments. It was reported that FTX used software to conceal the misuse of customer funds. Now, several months after Bloomberg's initial report on the relationship between the two firms, November 2nd, 2022, CoinDesk, they reported that a significant portion of Alameda Research's assets were held in FTT token. Now, several days after the publication of the CoinDesk article on November 6th, Binance CEO Zhao said on Twitter that his firm intended to sell all of its holdings of FTT, which was a lot. Binance had received FTT from FTX in 2021 during a transaction in which FTX bought back Binance's equity stake in FTX, where Zhao cited recent revelations came to light. Now, he didn't go in depth about what these revelations were right out the gate, but he just let that vague statement out there to the public, and then they discontinued talks and he wanted out of FTT. This later led to a decline in the price of FTT and other cryptocurrencies, resulting in a 3-day depositor sell-off, kind of like a bank run of an estimated $6 billion that sent FTX into that initial crisis. Now, on 8 November, Zhao announced Binance had entered into that non-binding agreement to purchase FTX due to what he referred to as a liquidity crisis at FTX. The deal did not include the sale of FTX US, and Zhao announced on Twitter that the company would complete due diligence soon, adding that all cryptocurrency exchanges should avoid using FTT tokens as collateral. He also wrote that he expected FTT to be highly volatile in the coming days as things develop. On the day of that announcement, FTT price dropped 80%, erasing $2 billion more in value. On November 9th, Bloomberg called the acquisition of FTX by Binance unlikely due to the poor state of FTX's finances. Bloomberg also reported that the United States Securities and Exchange Commission and Commodity Futures Trading Commission We're investigating the nature of FTX's connections to SBF's other holdings and its handling of client funds. With that being said, later that day, the Wall Street Journal then reported that Binance said they would not move forward with the deal to acquire FTX. Binance cited FTX's reported mishandling of customer funds and pending investigations of FTX as the reasons for not pursuing the deal. On 9 November, FTX's website said that it was not processing withdrawals at this time. SBF said that although the firm's assets were worth more than its clients' deposits, it would need funds from outside to meet the demand for withdrawals due to a lack of liquidity. It was on November 11th that Alameda Research, FTX, FTX US, and over 100 affiliates filed for bankruptcy. Crypto lender BlockFi, which I stated earlier, they were affiliated with FTX and announced on 10 November that it was suspending operations as a result of FTX's collapse. Bankman-Fried resigned as the CEO and was replaced by John J. Ray III, a corporate restructuring specialist previously overseeing the liquidation of Enron. And as of 12 November, $1 to $2 billion worth of customer funds cannot be accounted for. Over 1 million people are without money and can't even log into the FTX website without getting a bankruptcy notice. So what now? I guess we just gotta wait and see, but the two main things that I can think of, there's probably going to be a huge increased scrutiny of cryptocurrencies and its regulations, and there are a bunch of venture capital funds pursuing lawsuits against SBF. Protect yourself, protect your money.